This is the technical analysis you should be worried about, because if you're using this type of analysis, then you're sure to have losing trades. And we're going to talk about the technical analysis you should be using in the second part of this video, which is going to help you generate more profits, have less stress, and of course, no anxiety in your trading in 2023. First thing we're going to look at is an indicator of the Bollinger Band. You can see I've placed it on the chart. What we have, the center line is basically a 20 SMA. Many traders will also use EMAs and SMA for their technical analysis. So what's wrong with using one of those? Well, basically first we can see when we see price closing through this middle Bollinger Band, which would be the 20 SMA, this is actually showing for many traders a bias to the upside, of bullish bias. Now, for me, there's a trade right down here that we could have caught based on either a candlestick analysis, which we'll learn later in this video. But understanding the concept that when we're above this SMA or above the middle band, the Bollinger Bands, then you're looking for perhaps buys. Now, this may sometimes work well for your analysis when you're using this type of technical analysis, but remember, it is a lagging indicator, which means price is what creates these indicators to move. So if you're waiting for price to move when you're starting to see this, you're missing out on all of this move. And that's not the game you want to be playing when you're looking at trading in these markets. So another thing we're looking at is when using the Bollinger Bands. Many traders will look at when price spikes out of the upper band or the lower band for a trade. Now, on some occasions, this may well work for you, and you're going to find you could capture a nice trade. Especially when we look at this move here, we wick out a nice move to the upside. But on most occasions, you're going to find many losing trades using this type of technical analysis. Look at the way the market chops up and out of those areas on the Bollinger Band at these locations. They are not areas on the chart you want to be taking a trade from. If you're applying this type of entry strategy, using an outer Bollinger Bands with your technical analysis, using these indicators, you are going to lose. Let me just go through again what I mean by this. If you're using a Bollinger Band, you may well be looking for a bounce off the center band even, where a breakthrough, pullback continuation. Yes, this one would have worked. Nice trade to downside. But again, look what happens when price bounces off the band and goes nowhere. Now, what you're going to do in those situations, you're going to lose, you're going to have anxiety, the stress will come out, and you'll revenge trade. That's when you're going to lose even more, and you end up blowing your account. This is the technical analysis you should not be applying. There may be some occasions it'll work for you, like I said, but the majority of the time, you're going to find you're going to lose in the market using this type of technical analysis. Now, the other way we can look at the market, which remove those Bollinger Bands, is what I call the using of the trend lines. Now, many traders will use trend lines for their technical analysis, but again, this is very subjective. What do I mean by that? Well, we can draw a trend line that say from here, linking these lows, okay, the market breaks through. At this point, traders will be leaving to take a buy from here. It fails, it breaks through them and looking for a sell. But look at this. This actually manipulates through the trend line and gives you a buy. Again, it's a type of technical analysis you should not be applying. You can actually use trend lines in all different directions, but also you can look at using trend lines. You see, we mark them all out on the chart now. This is how subjective trend lines can be. And you can end up having loads of different trend lines, even the smaller trend lines in here. And this is where you're going to find they does not work all the time. And you can end up having more losing trades. Yes, there is a time you may be able to use trend lines to your advantage. And I would look at using them in a bullish or bearish trend. If we see the market basically making a nice bullish trend, and we're looking for the trend line to be linked off the previous swing lows, and you'll be looking for the market to come back to test that trend line for an entry to capture a trade. Now, that can work if you apply it with what I'm going to teach you coming up now in this second part of this video. Trend lines, indicators are all lagging because you're still applying those trend lines after price has shown its move. So what do I suggest? What I actually suggest for your technical analysis to improve your trading is to look at supply and demand zones in the market, using imbalances in the market and look at it using the break of structure and the change of character. Now, I'm briefly going to go through those concepts now in this second half of the video, exactly how you can use that to your advantage. Looking for trades, like I said down here, I'm going to show you how you're going to take in a trade, understanding these techniques. And what you'll be able to do is see that we wait for the trade to come to our entry. There's no chasing of that trade. Having the correct technical analysis is what's going to make you a profitable trader. It's going to make you have less anxiety in the markets and less stress when you're trading. So let's look briefly at why this was a good trade, how you could have used these types of technical analysis I'm now going to share with you in your own trading going forward in 2023. Leave a comment below and let me know if this is the type of technical analysis you want to be using, that you're looking for the trades that come to your entry point and you're not actually chasing for that trade. So what we're going to look at first is understanding the market structure where we see in a break of structure. We have this swing low, we create this swing high, we break to the upside. We then see a pullback here, continue up, another small breakout. Again, we create another new swing there in the market, and another breakout. Let me show you where these swing points are. And we have another swing point there, and another swing point there. So you can see we're making higher lows in the market. Now, the last point, we break out a nice solid move. This low here in the market, we can draw out what we call an area of demand. Down the right place. And you can see the market comes back and tests that demand zone to the pip. Now, we also can apply what we call an area of imbalance. Now, there's plenty of videos through this channel, but I will be leaving a video at the end of this video so you can understand how we can use imbalances with the bias in the market for a strategy. Now, what we can do is we mark our imbalances out from these gaps. You'll understand in that video exactly where those gaps are, how to mark those zones, and how to trade them. So we can see we have a bounce, we have a fill here on that imbalance, and we have a nice zoom in. You can see using candlestick analysis here, we're using a supply and demand and imbalance analysis with technical analysis. There is our actual candlestick analysis, a pin engulfing I class this as. And we also have what we call a reversal here in the market. Can draw this out where we see we have bearish candle down, bullish candle up. This is a lovely area to take a trade on a lower time frame, retesting this level, and you can see the market continues up. Now I'm going to show you how you could have caught a confirmation entry here, or what we call a change of character. This again is another technical analysis you can apply in your trading. Using these types of technical analysis with supply and demand, with the use of candlesticks, is where you're going to find much more profitable trades. So we can also identify here the market. We also have a previous low. Now there's more on this in other videos in the channel, which goes through the use of what we call manipulations. And this is actually a manipulation of this low, where you can see the wick through, filling the imbalance into the demand zone and a nice reversal. Now I do teach all of these concepts in a much more step-by-step process. And you can learn that inside the Forex Masterclass course. Now, if you want to check that out, there's a link below in the description of this video. So this is where you can capture an entry. Now, if you want to take an entry on a candlestick pattern, we can easily take an entry on this bullish candle. Now, your target would have been this previous high. And simply, I'll also be looking for any other potential targets at these levels here in the market. Now, more on what these levels are, if you keep watching to the end, remember that video will be coming up to teach you about these levels and how you can actually use them for a reversal in the market. So here, we have a nice move here. We can actually look for an entry off this candlestick if we wish. Stop at the low, and you'll target the previous high. Now, we have just about just over 3-to-1 risk to reward using this type of technical analysis for your entry, your stop loss, and your target. If you're just looking for a single target, the previous highs. Now that is a great target if you're looking for any type of trade. Target the previous highs, the continuation of that trend. Now we can increase that risk to reward by going down to a lower time frame, and we'll look for using the confirmation entry. So we go down now to the 30-minute area, and we'll zoom in so you can see exactly how this is applied. And what happens is the market, using this type of technical analysis, remember, if we're using indicators or trend lines, it's very subjective. and also a very lagging indicator. This is showing you current price action instantly on the chart. You can back test this. I suggest going away, back testing this, and you will find it works for you. Now, if you are enjoying this content today and you're looking forward for more videos like this, don't forget to give me that thumbs up. And in fact, let's see if we can hit 1,000 thumbs up on this video, because that's what we want to see. Plenty of thumbs up, so I know you're enjoying this type of content. So using what we call the change of character. As soon as we see the fill, and look at this imbalance level filled to the pip, we have a wick below the low. That's another manipulation in the market, where they push the market down just to take the stops below here. We then break this structure high, this bullish candle to the upside. This now leaves what we call an area again of demand right here in the market. Let's change that to demand zone. And it's right here, you'll be looking for your entry off this demand zone. This is what we call that change of character. We place our stop to the low, and again, your target. You look over first target, which is probably at this level. You can see now that first target is in fact the same risk to reward you saw on the final target using the higher time frame of a candlestick pattern. Now your final target would then be this high, and you can see if we shrink the chart, move along, that trade is now gone from just over a 3-to-1 risk to reward to just over a 9-to-1 risk to reward. So this is how you can use this type of technical analysis so you don't have that anxiety in your trading. And as I said, this video popping up right now will teach you how to look at these imbalances in the market and how to use it with your market bias and finally find a strategy that's going to make you profitable in 2023.